Welcome to the Metals Investment Forum virtual section. Today, actually, it's the first time in the past few years since COVID that we're doing virtual for November. Usually it's on-site. We're doing that in Vancouver. It tells us what kind of market we're in. This year has been one of the worst for the juniors, for the mining sector, but we have a very bright, I believe, future ahead of us. So I hope you bear with me, go through my presentation. So my title is how to invest in the 5% rate, because right now you can, if you put it in money market or put it in CD, you can get, at least in the United States, 5.5% interest rate. So how do we do in this kind of environment? Okay, I think in Canada, probably similar situation. Let's get started. Okay, this is my disclaimer. You can read it on your pleasure. And so I'm just trying to put out the big picture, okay? Because inflation, CPI was down a few days ago, so we have a big rally of the debt, the rally of the bond, the interest rate drop. But we want to see what is coming, right? We have mountains of bond issuance coming. So this is a recent report actually by JP Morgan. You can see in the United States, our budget deficit is going this way, going parabolic. Well, our issuance has been down in the past few years. So what it means is it's always follow, this always follow the budget deficit. So the issuance will go up significantly in the coming years. And in the meantime, our Fed is loaded with treasury bond. I mean, the loss they incurred on buying the bond is enormous. Okay, so I just show you the big picture. So this is what the projection is. In a few years, we will see first time that our entitlement plus interest will be over the net revenue. What does it mean? It's all the money coming in, we'll pay the Social Security and interest. That's it. We cannot pay our army, cannot do anything. So the point of no return is coming. Okay. So actually, let's go back a little bit. Just go here. So right now, we are seeing that foreign buying of U.S. government bond is still very strong, with only exception of China. Okay, so what that means is one day the borrower of United States will demand much higher interest rate. That actually will push the curve even sharper. So within 10 years, we know that within 10 years, maybe 5 years, United States will face a very painful choice. You have to do significant cut of spending and then raise taxes. There's no other way. Right? We are heading towards a banana republic. That's in the JP Morgan recently, right? In the JP Morgan head of equity research. Okay, he used the name of Weimar Republic. He said, if I'm on this point of no return, nobody is buying our bond, the Fed has to start buying bond. So then we are creating a Weimar Republic. Seriously, and then they said, not publicly, okay, they said to their private client, JP Morgan, they said, you should own 3 to 5% your asset in gold. Obviously, nobody owns gold right now. That is from JP Morgan. It's not from our good friend Quentin, Tavi, and Kevin in their webcast, which is very right on both sides, but it's from mainstream banker. They're talking about we are potentially heading towards the Weimar Republic, and then potentially you have to own some gold just as a hedge. Okay, let's go to the next page. Let's look at our bank situation, right? So the rising of the bond, okay, actually create a huge loss to the interest rate, rising our interest, huge loss to the bank. Okay, you know Silicon Valley, you know all these famous banks, but look at the Bank of America right here, right? On the paper, on the Fed stretch test, our bank is very strong. Look, our tier 1 capital ratio is 10% or more. But if you mark to market the bond losses, they're actually here. That's Bank of America, too big to fail. Okay, you think about that. What if there's some issues happen? What happened to our bank? So all these become a serious question. So for me, I'm just saying what I'm trying to do. I manage my family asset. Has been a very tough year. We had some big success and a lot of failures too. So I am not a gold bug, okay, or silver bug, but I like commodities. I will talk about, we just have a Silver Institute annual report last night. So I will talk about the silver later. But I like right this moment, I think commodity is at a very good junction for commodities. And we also invest in different sector. I invest in energy and biotech. Okay, so let's see. So 5%. Okay, what can you do? A little bit more than 5% without taking too much risk. You know, I have a biotech takeover. You know, Bristol Myers take over another company. That was last week. This week, because market go up, the situation doesn't exist. Maybe you got 5% in 6 months, but you have potential for 25% for the milestone, right? So last week, when I was writing this, it was 10%. You can do 10% in 6 months. It's a regular takeover, no controversial. It's not a big company merge. It's big company by small company. There's no competition. So all the box checks will close within 6 months. You get 10%, and it's capital gain. It's not interest, right? So you don't pay the ordinary income tax. You pay the capital gain tax. That's one. And also, I want to point out, I don't have too much time. It's a special metal. It's a platinum. It seems to be a screaming buy. Let me show you why. The platinum right now, we have a huge deficit right now this year, okay? Because all these industrial, the platinum also use semiconductor, also in the diesel and so on and so forth. I have a huge deficit. And then this is for the sake of time, I just put one slide here. This is the Spanish steelworker last quarter report. Okay, at that time, the price for PGM, so basically platinum, palladium, rhodium, and gold, right? So they put all these together. They found that all these operations are not profitable. This was a few months ago. Now the price is about here. Okay, so you see about 1/3 of South Africa's mines are not profitable. You think about that. So because platinum is harder to mine than gold. Gold is about 1,500 all-in sustainable cost. Platinum is 900. So what to give? We have a huge deficit. One is a record deficit. And then 1/3 of the mine is going to close down. And then it's very different. Platinum very different than silver. Platinum is a primary producer, right? It's a platinum mine. So those mines cannot survive. So they got cut. Silver sometimes a little bit different because a lot of silver is co-product of copper mine, zinc mine, and so on and so forth. So so they can, you know, they're not very sensitive to silver price. But on the other way, also true, when silver demand pick up, we don't have too much supply. But platinum is just primary mine, majority in South Africa, 1/3 of mine looking to be closed. So you can just buy, I own a lot of platinum ETF. I own platinum future, just for full disclosure. So I see it probably will do better than 5% for me in the coming months, if not years. And also I want to talk about the energy a little bit. Without taking too much time, I think Quentin and Tavi and then Kevin said very clearly in their presentation as well. So they are also very bullish on oil. So look at this. I want you to look at this bottom of this, okay? So what does this mean in the past 2 years? What happened? United States oil production goes up. United States become the net export of oil. Okay, the things has changed. It's very different than the 70s. Okay, United States is exporting oil. Okay, who most afraid of higher oil price? It's China. The second is Europe, and then it's Japan and India. So lower oil price benefit most is China, Europe, Japan, and India. United States actually benefit from high oil price. Well, net, you know, we are a little bit, but let me just tell you, the situation changed so dramatically. So it's not to our interest to keep oil too low. So I see oil higher for longer. That's my point. Higher for longer means the higher oil price, $70, maybe it's a norm for a very long time. Then it's very good for pick up undervalued energy stock for the long run. So this is another chart. This is United States. This is China. See, China's demand keep going up. United States has actually quite flat. All these are from the Energy Information Administration, from our government. You can Google it yourself. You can get the same information, same conclusion. Okay. So China's production and the United States production, right? So that's very different. So this is another side. Okay, you look at the capex. Look at the capex of energy. Okay, there used to be capex. People say, "Oh, the oil will boom and bust; it will crash again." Look at how much capex we are spending. The Exxon, they are investing in lithium now, right? All these energy company, they think, "Oh, we want to go to energy transition. We are not going to invest in oil and gas anymore." As a result, the spare capacity in the world is very low, and in the meantime, our strategic reserve is very low as well. So we are feeling the refill the strategic reserve right now. So personally, I think it's more important to get the Keystone pipeline actually much better than the strategic reserve, because we can just pump all the oil from Canada. We don't need that much strategic reserve, but they don't feel it. That's fine. So that's what I'm trying. That's finished my energy thesis. Okay, and my thesis for energy is that the oil likely to be higher for longer. Then I'll talk a little bit about the China gold rush, right? There recently, as I reported in the last myth, there's a strong buying of gold in China. So this is the latest, okay? We were around here in the last Middle Investment Forum, and then the premium came down a little bit and now come back on around $50, stabilize around $50 an ounce. That's actually enable people to smuggle gold into China. They mostly is from Hong Kong, Shenzhen border. So there people are smuggling with putting their socks or whatever, they smuggle gold into China. So, and then around the border is a big transition. People, buy gold at the discount. So it's a significant premium in China. And then in the meantime, Chinese central bank has been buying gold every month, right? Every month. So why is the reason for Chinese government about the gold rush in China? Because China, traditionally, people have a very high saving rate, right? Traditionally, put in apartment, put in, the real estate, but the real estate start going down. It's continued to go down. The bubble already popped, right? So they overbuild. And so we kind of way down to go. You put in the bank, China is cutting interest rates, negative interest rate. China has deflation right now. It's like us many years ago, right? So people feel uncertain. So there are some people just buy some gold as a hedge. It's not really speculative. People just buying some gold as an alternative investment. And then it's very interesting that for the first time, a lot of young people start buying gold. Half of my age, half of Quentin's age, half of Peter's age. So those people, they start buying gold for the first time. So usually, a lot of physical gold going to China eventually will lead to gold going much higher. It happened before when Goldman was pushing gold down. Goldman said gold will go on. Chinese moms start buying gold. That actually reversed gold trajectory for quite some time. So I think the more this kind of, let me show you, this is a very significant chart. This premium, if you look at this premium, you can go to the work gold council. You can get yourself. This kind of premium persists. There will be more and more physical gold flowing to China, and I think results will be gold will break out from 2000. Let's see. Okay. So again, this is where to invest in ahead of recession, which is very likely we're going to happen. You see, the best place to invest is gold, and then next best is the commodities. Okay, so and then if you invest in the stock market, usually you're on the losing end. So the question is where we are. I think we are pretty close around here. Okay, with all the, you know, all the high interest rate and all these number is going down very rapidly recently. Oh, this is my favorite. I was in Silver Institute the summit yesterday. Okay, they just issued a new report on the photovoltaic or solar panel, how much silver is used, right? So you can see that I took a picture. It's not, I'm sorry, it's not very clear, but you can see that it's 30%. They will have a detailed report coming in the coming days, if not weeks. And then you can request a detailed report from Silver Institute. 30% of silver, you see, it's just goes straight up, right? 30% of silver in the solar panel or photovoltaic of 600 something. So it's about 200 million. Remember the number, 200 million of silver they project will be used in solar panel this year. I think their projection is still a little bit low. I challenged them in the conference. I don't know if you watch the webcast, but I think it's a good step at the right direction. They're already using 400 gigawatts of PV capacity this year. If you look at Jeff Christian's presentation, he's only used 200. That's way behind the curve. So they're getting there, 400 gigawatts, and then you're getting 200 million ounce. Okay, and let's look at their projection before. Okay, that's where about a little over a year ago, I look at this 110, 120. That's when I say this is not right because the silver demand for this in the solar panel is going through the roof, right? Guess what? We're going to 200, at least 200 million. Okay, you can imagine from 2021, 110 to 200, at least 200 this year. That's almost 100 million ounces of silver actually used in the solar panel. So where those silver come from? There has to come from somewhere. So this solar panel is taking away all these silver from whatever smelter, and then maybe from Quinton San Cristobal mine, from all the other places they use in the solar panel. And it's only the beginning. Look at this. This is a beautiful chart. Okay, so this is a TOPCon. If you know, I was talking about TOPCon last year, a year ago. So they finally gave a very realistic estimate of TOPCon. Okay, TOPCon, this use high silver content. Next year will be over 50%. That was, if you look at my presentation a few months ago, I already predicted it will be over 50%. Now they believe. They went to the industry, went to the conference, check with their supply, check the sources. They agree, at least 50% next year. And look at this chart. This is the silver loading factor. I mean, a lot of things, if you talk to Jeffrey Christensen and all the other silver, non-silver bulls, they always think this will go down to the toilet, right? We use less and less silver. But look at this. Look at what happened. It's flattened. Because even though we try to use less and less silver, because the new technology use more and more silver. So we are pushing to the limit of how little silver you can save. So actually, per solar panel, per silver is flattened, while solar panel is taking off. So that means we will have a lot more silver. I cannot imagine how much more silver we'll use. And look at how much we're going to, the demand plus the silver use. You can do your own calculations. Okay, so this is the EIA report. I think I'm running out of time, so I'm just trying to go through that. This is my report about a few months ago. You see, that's a forecast I got from China. They said 50% by next year, the TOPCon, right? So it's going actually faster than that. So anyway, I'm really running out of time, and then the cost is really going down. That actually spur the demand because it's cheaper, right? So solar panel is the only energy source actually going down because oil is high, nuclear also high, uranium is expensive, and the solar panel is only one going down every year, every month. So that's increased popularity. Okay, so anyway, so I will I don't want to take too much time. And we have I think we're in commodity super cycle. This is chenpick.com. That's where I have, and I will send over to Quentin. And Quentin, everybody knows. I mean, this is a well-known name. I just want to say, this year has been such a terrible year, but there's two company that are doing extremely well. One is Snowline, one is Hercules Silver. And then guess what? Quentin was there at the very beginning. So he's a visionary, he's a geologist, he's also a visionary, and then he picked great stocks. So let me leave this way. So let me give to panel to Quentin, talk about Goliath. Oh, by the way, you can ask questions. At the bottom of your screen, there is a button. You can click on that. It will actually encourage everybody to ask questions. We will have a Q&A right after Quentin's presentation.
Cool. Thank you very much, Chen. Pleasure to be here virtually. Always enjoy working with Chen here, talking about some of these good stories that really are at a sharp discount right now, I would say, in this market. But we've seen what's happened to the precious metals in the past few weeks. There was a bit of a burst back in early October, came off a bit, but guess what? It made a higher low. And now we're looking like we're going to make a higher high here very shortly. It's a wonderful turn of the market. I think, if it's got some legs here, stocks like these that I'm going to talk about should do very, very well. These are bona fide discoveries, or in the second case, a producing mine now, that should see significant upside just from the rise in the metal prices. All right, so let's talk about Goliath here. Look, this is probably, in my view, it's the most exciting exploration discovery in the Golden Triangle in quite some years. We got involved late 2020. They had some channel samples that were remarkable. They sawed some channels along this sherbet zone where it outcrops, and it was just kind of like sticking out, so blatantly. It was like hard to refuse. They had 6, 10, 12 meter intercepts or channel samples of 9, 10, 15 grams gold equivalent. And it just, it was so obvious this was a big system. We jumped in with both feet. Eric Sprott followed us shortly after, and we've been a very happy shareholder. We've also, I do help the company quite a bit. I act as an advisor to Crescat Capital. Obviously, that's my main focus as we are the biggest investor. But I do like to get my boots on the ground. I was up there earlier this summer, and it's just, it's exciting to actually get to see what is a discovery that's unfolding in front of us. Let's go to the next slide here. Let's see. Why is this not? There we go. Okay. Disclaimer page. Have a very well-focused board and technical team, I'll call it. I'm a technical member of the team. I work with people like Vanessa, for example, who is doing a lot of work trying to help us focus the structure, structural interpretation and so forth of this very important deposit. And then Rain Turner, a longtime well-known geologist, delighted to see him join the board here very recently. Okay, shares out a little over 100 million shares, fully diluted 143. You can see right now, fully dilute, where the market cap is at a sharp discount. Okay, so it's trading, I think I checked my phone right before the presentation, about 75, 80 cents Canadian, somewhere in that range. Should a discovery of this magnitude be at this price? Probably not. It should have a lot of upside. Eric Sprott's in. Rob McEwen joined as a shareholder a few weeks ago. I did see Rob recently at the Zurich show, the Precious Metal Summit. There was a lot of excitement, this story in particular. Okay, you can see it's located way down to the south end of the Golden Triangle. This Gold Digger project has a number of very impressive targets across it. It's a very large property. But it's really this sherbet zone that we're focused on as far as this discovery goes. Okay. We have, you can see the location of the sherbet zone here. We have several mines in the close vicinity, or several deposits, I should say. Right across the mountain range to the northeast, you can see the Dolly Varden mine. Of course, Dolly Varden is the company that owns it, as well as the Homestake Ridge deposit. And genetically, all these deposits fall within the Golden Triangle, along or in proximity, I should say, to the red line. This is a stratigraphic break that seems to be a very profound but important break that deposits of very great size seem to occur. Okay, so let's talk about the Sherbet zone and what's been done. The company has drilled this fairly aggressively. It is steep terrain, but what they've done is they've set up an array of drill pads across the mountain that allow them to drill radial sequences of drill holes that test this fairly shallowly dipping structure that dips to the southwest at 40 degrees. In the Sherbet zone, which is usually anywhere from a few meters, maybe 2-3 meters up to 10 or 12 meters, has been encountered virtually in every single one of these holes. Now, that was going back to the early days. What they've found since is that there are other structures below. There's the Bonanza Shear and the Golden Gate Shear, which are turning out to be very, very important as well. Now, the company has done a lot of the basic works on the property, including metallurgy. Get exceptional gold recovery, 92% recovery, much of that coming from gravity gold. This is an exceptionally metallurgically friendly deposit that should make an absolutely fantastic mine. Now, in 2023, company was very aggressive. In fact, I think they were the most aggressive company drilling in the Golden Triangle. They drilled something like 100 holes. There's a lot of holes coming back from assay. Why did they do that? Because as they drill more and more, they're starting to find higher grade zones and so forth. I'll talk about that more in a minute. Sherbet zone, here it is, an outcrop. On the left-hand side, you can see the trace of the Sherbet zone. This is where some of those original channels were taken. You can see very, very strong numbers. It's usually quoted in gold equivalent. Gold accounts for, say, 80% of the metal value, but there is a significant component of silver in these as well. Okay, now the Sherbet zone is shown, from afar over here in the slide on the right-hand side, but we're going to see a number of other structures around the Gold Digger project that are very similar. In other words, this is not just a one-off. Okay, here's some photos of the outcrop. This thing literally just sticks out of the ground. It's been exhumed recently by glaciation as the glaciers have receded, melted back. That's how this discovery was made. This mineralization is comprised of quartz veining with a bit of sulfide. Sometimes it's very solid sulfide, like you see in the upper right there. But for the most part, it's a few percent sulfides, usually pyrrhotite with a bit of galena and sphalerite. And that's a very good indicator of strong precious metal values as well. They see this in core as well. When they're drilling, it's very easy to distinguish high-grade mineralization. You can see the host rocks, the sandstone siltstone around it, usually a kind of a gray or mottled gray color. But boy, when they're in those veins, you see that sulfide, you're in good stuff. This is an example of a very high grade intercept that was encountered recently. You can see gold gram per ton up to 110 over a narrow subset of the vein, but it's a broader vein, as you can see, 11 meters. It's 22 grams gold overall. In gold equivalent, that's 24.8. These are world-class drill intercepts. Reminds me of things like the famous Pogo deposit, for example. Okay, fast forward. This year, we drilled a bunch of holes, over 100 holes across the property. Lots and lots of assays have yet to come back. What's amazing is that not only, after 3 years of drilling, not only are we seeing this thing grow, we're seeing higher grades pop up. In fact, that central area there, I'll talk more about in a second, is returning higher and higher grades. So we do seem to be close to, we'll say, a feeder system of some sort. There were 65,000 meters drilled to date. Okay, here are those three structures that I mentioned earlier. The Sherbet was the first discovery. You can see why it outcrops along the ridge of the crest of the mountain there. And that thing dips gently to the west or southwest. We're kind of looking northward here. But as they drilled down, they started to find intercepts in this bonanza shear. This is basically a flatline shear zone in purple that is equally impressive. Don't have as many pierce points across it, but they are drilling more and more. That was one of the reasons they were very aggressive this year, because they wanted to get more data across that very important shear zone. And then another structure was found, the Golden Gate zone below the bonanza shear was discovered, and some of the best grades are coming from that. A lot of holes with visible gold. So really, this is morphing into a more complicated but more opportune deposit or discovery that could have a lot more upside. How much could this host look? That yellow patch right there is about 5.5 million cubic meters. If you just look at the volume of it, is all mineralized equally? No. But the average grade so far over a 6.88 meter width is about 6.3 grams per ton gold equivalent. That's great. What will likely come out of that? Yeah, there's going to be higher grade zones in there. There's going to be lower grade zones, but that's just the average. But you can kind of get a sense just based on that. There's a lot of volume here, a lot of rock that could end up becoming, in a maiden resource, it could become a significant gold discovery. We'll hope maybe a few million ounces. Here's a cross-sectional view of that. One of my interpretations, and not sure if I'm right or not yet, but you can see how the Golden Gate zone has a similar profile to the shear bed above. Perhaps along that bonanza shear, maybe there's a little strike slip displacement. In other words, maybe the Golden Gate is actually the extension of the shear bed, but it's just slightly been offset. But isn't that remarkable? This illustration shows a number of the drill holes, the gram meter intercepts that have come back. This is a very robust system, and it will deliver a multi-million ounce gold deposit. Okay, here's a plan view of that same area. One of the things I'll point out here is, of the highest gram meter intercepts to date, a lot of them fall within the northeast corridor that's really taking shape as likely a feeder or kind of a center of gravity for this whole system. We don't know exactly where the fluids were fed from, but you can see a lot of high-grade intercepts, a lot of good gram meter intercepts occur within that central northeast trending shear. They're going to do a lot more drilling in there next year. Ounces count. When you find the high grade, you got to follow the high grade. Here you can see some of the intercepts they've had this year. A lot of visible gold. They have had some stellar intercepts. Here you can see 65 grams over 7.9 meters. That's just astounding. But they saw this visible gold popping up more and more in that central high grade area. And I think, this speaks volumes about why you need to focus on that high grade. 2 ounce per ton rock over nearly 8 meters. The more of this you can find, the better the outcome. They've clued into it and they know where to go now. Next year, they should be able to follow up and have a lot more of this type of material. This hole is a similar occurrence of visible gold. This one is a 485 gram meter intercept. It's really a much thicker interval, 23 meters, 21 grams gold equivalent. So it's a bit lower grades, about a third of the grade of the previous hole, but it's a much thicker zone. 23 meters is more than sufficient width to mine this thing in bulk. Okay, a lot of people say, how are they going to mine this thing? Like the Pogo deposit in Alaska was a very similar geometry, had very similar widths to this, very similar high grade, and it made a fantastic mine. It was a mine that cranked out and is still cranking out over 200,000 ounces per year on an ongoing basis at a grade of about 15 gram per ton. Is that kind of a scenario possible here? Yes, and it is on similar oriented veins, okay, kind of low angle veins that can be mined by modified rim pillar, bulk underground techniques that are cheap and effective. These are just some geo pics that show the visible gold they've been seeing lately. Again, very similar to what one might see in deposits like Pogo. All right, a little bit about other discoveries. So the shear bed is very exciting. You can see the footprint of it there, but there's a lot more discoveries. To the north, there's the Kahuna zone, but down to the south and east, they found some late in the season yet, or right before the season ended, like the Humdinger and so forth. where there's a lot of similar sulfide veins sticking out of ledges along the mountain ranges in here. So this is an immediate target for next year. They will test these. I think they wanted to get some holes in late this season, but they simply ran out of time with the snow. And then across the bigger property, okay, so sure bet over here on the right, is towards the south end of this. And they got up and did some work in the snowfields to the north. They found some remarkable showings that are freshly exposed right out of the glaciated areas. As the glaciers melt back, they're finding more and more material. There's a lot of assays, by the way, that are coming back from these areas. I think we're going to see some exciting news about some of these new discoveries in the very short term. Okay, some of them are illustrated here. You can see Treasure Island, Goldfinger, Metallica, and so forth. These, again, discovered late in the season. I was actually one of the first to go up into this area back in late, I think it was early July of this year. Just sulfide sticking out everywhere. Okay, there was amazing veining, a lot of visible sulfide minerals like chalcopyrite and so forth. I would expect some very, very good numbers from the samples that they collected. This is for future testing, though. It is, extension of discovery that can be added to the already exciting story. All right, here's contact information. Take a note if you want to talk to the company. This is how you do so. And with that, I will stop for Q&A.
So let me maybe I can start it a little bit. I mean, I'm has been an investor for Goliath. Has been a great investment. So what do you see the potential upside? I mean, I'm not going to hold you against 4311, but this is a multi-million ounce. How do they compare, for example, Britain, I mean, before it got taken over, right? So how do they compare with other big project in that area?
The best one I can, like direct analogy I can draw, Chen, is the Pogo deposit in Alaska. Okay. To give you a sense of the magnitude of that deposit and what we might have here, Pogo was found in the mid-1990s. It was actually developed fairly quickly into a mine. It was partly by Sumitomo Metal Mining, a good friend of mine who's passed away recently, found it. He told me the history of Takaoka told me the history of the discovery, but also kind of the result of the first drilling they did, like this level of drilling. They came up with about 2 or 3 million ounces in the early days, running about a half an ounce per ton. But at the end of it, Chen, they've been mining now probably on average about 280,000 ounces, I think, year over year on average for about 23 years. So do the math on that. I think the current production out of Pogo is something like 8 million ounces or thereabouts, and it's got a lot of reserves left. Northern Star's operating it now. So my point, Chen, is this, and I try to emphasize this on some of the YouTube videos that we do. We in the mining industry need to find our way again, and what I mean by that is we need to learn how to do work like we used to, where we would drill up. We knew that we were onto a big system, but we would drill up a subset of that we could make into a mine. So in the case of Pogo, 2 or 3 million ounce starter mine. Okay. And then knowing full well there's lots of more exploration to do, we get production, but we get that cash flow that allows us to spend money on further exploration as the mine progresses. Okay. And that's the most economical, most efficient way to advance most of these deposits. I would not like to see this company drill this thing to, for the next 10 years to the nth degree. I would rather see them focus on maybe the first 2, 3, 4 million ounces that they can put together. And I think it's there. I think it's very easily there. But knowing full well, there's likely going to be an outcome of more like, 7, 8, or 9 million ounces at the end of the day. I hope that makes sense.
Okay, great. Thank you. We got some questions from the audience. So what do you see the Goliath rank in other, similar stage companies? Are this your top 10 or top 3?
It is. It's a little bit behind some of the other stories like Newfound and so forth. Newfound is drilled, I think, north of 400,000 meters at this point. It's obviously easier to work in Newfoundland, flat country. Can work year round, more or less. But I would put it in that rank. I would put it in terms of magnitude. This is likely a multi-million ounce deposit that should make a close to, maybe not quite, but close to a tier one level producer. Okay, that's what we need to be working on in the mining industry. Finding deposits like this, the major mining companies are going to want to operate. They make a very good margin. This is a high grade. It should make a very good profit. This is what we need to be looking at. What are other examples? Let's see. I would say Windfall deposit. Again, that's been drilled much more than this, but similar. What's the one? Amex, I believe it is. That's another example. That's up in the Shield, the Canadian Shield. There's a few of them like that out there, but this is definitely in that top 10 league.
Great. I have another question from audience, actually very suitable for me. I'm a shareholder. So what is, how long does it take to drill it out, and how it may take a long time to get into production? What is Goliath's plan? Do you want to sell it to let someone develop, or, or you develop yourself, maybe?
The plan of any junior company, in my view, is to have a path forward to production. You got to, and we are doing a lot of the basic work. I've been really helping and pushing the company to do some of these fundamental, data acquisition exercises. We'll call it science projects like metallurgy. And you need to do that so you have an understanding of how this project will behave, how it's going to turn out as a mine. They've done that. They've produced fantastic results. They are working on other aspects of this around early stage permitting and so forth. But all of that said, look at the district. There is some indication now that there's M&A starting to show up. It's generally across the Golden Triangle, but even in this part, this southern terminus of the Golden Triangle, Hecla has made some pretty aggressive increases in their position in Dolly Varden. I know that there's other companies knocking on the doors now around this area. And I wouldn't be surprised if Goliath attracts the attention of some of these majors. So we'll see.
Oh, good. Well, yeah, we have so the one of the questions that are very interesting is that the market is so bad. Why Goliath is stock almost double from a year ago? So one of the better performers, actually one of those that stand up from all the other juniors.
That's a good point. Yeah, a lot of people are bemoaning the fact that it's half of the price it was a year ago. But if you look at many stocks that are now, 20% of what they were a year ago, it's actually held up reasonably well. And I think with the results that you have coming back and starting to see, some interest, especially with Rod McEwen and stuff coming in, I think this will be a story that kind of regains a lot of traction, gets back up to that share price we saw not too long ago.
Okay, great. So what's infrastructure over there? Maybe you can comment a little bit in that area.
Yeah, so there's a little town called Kitsault, which happens to be on one of the fjords, one of the arms of the ocean that sticks up in there. And Kitsault is actually very close. The team works out of Kitsault. They have the camp set up there. It's got dormitories. It's got a big area they can put their core yard and so forth. It's actually a idyllic setting. If this was put into production, there's two ways to access the deposit itself. One would be to take a spur off of the road that goes up to the Dolly Varden mine and connect the Sherbet area in with that. That would require, going either over a mountain pass or even putting a tunnel through it. A little bit premature to say that that's what they would do, but I actually like the other plan that is easily visible here, and that is to take the arm of the fjord that lies just to the west of Sherbet and use that for access. In other words, you mine, put it on a road straight down to the fjord. You have a terminus there where you can take barges in and out, and you can actually either build a mill and process up there. You direct ship ore out of there, and then process it at a central facility like down at Kitsault. Okay, Kitsault, there is a permitted mine and mill facility. It's no mill built there right now, but it is a permitted mill site. So there's a possibility there.
Oh, great. Yeah, I'd like to turn to my good friend Peter Krauth, and maybe he has some question for you. Peter, would you unmute yourself first?
Great idea. Thanks, Chen. Quentin, thanks for that great presentation. And yeah, I do have a couple of questions. One of the ones that strikes me, you mentioned Dolly Varden. We see that they're essentially neighbors, and I do follow them closely. And I'm curious, it's obvious that, as you say, these discoveries tend to be within relatively close range of that trend. But if we talk about Dolly specifically, given the proximity, and I know this is hypothetical, but the chances that there's some sort of connection between the source of the mineralization between these two deposits.
Okay, so the question is, are they related somehow? Is that the question?
Exactly.
Okay. So look, there's a like that red line that I showed you earlier. There's a variety of ore deposits along that red line. Some are actually VMS systems, and there is VMS mineralization, clear VMS mineralization over on the Dolly Varden side. So there is that kind of, we'll call it early stage, style of mineralization that was formed when the rocks were deposited very early. Okay. But this one, this more, epigenetic is what we call it, style of mineralization, is related to later events, later magmatism and stuff that occurred maybe 50 to 100 million years after that early event. Now, it's probably not directly related to the Dolly Varden deposit itself, but there are other deposits on Dolly Varden's property, like Homestake Ridge, that seem to have a very strong similarity to the Sherbet zone. And, I would probably more likely, make that mental link between those than I would the Dolly Varden deposit.
Yeah, thanks. That makes sense.
Okay. All right.
Okay, yeah, maybe there is another question from the audience. They asking about Lucky Strike area. Is there still of interest, or
Yeah.
you already
I saw Roger and his team over in Zurich a couple of days ago when I was at the Precious Metal Summit, and I asked what happened there. It sounds like when they, first of all, the season kind of ended a bit more abruptly than they thought, but it sounds like they kind of pulled in their horns with their ambition to drill those deep holes over there, mainly to save money that they could apply to the Sherbet area right at the end of the season. They were hitting some really nice visible gold intercepts there at Sherbet, and I think they simply wanted to throw more of their ammo at that. It's fine. It was a decision they made on the fly, but I still like that lucky strike target a lot. I talked about that a few months or weeks ago on our video, and it is one of the better porphyry copper gold targets I've seen in the whole terrace region. Has to wait till next year.
Oh, great. That's most of the questions, and I saw in the box. Peter, do you have additional question for Quentin?
I do actually. Now you did talk about it's early days, obviously, to talk about how this may end up getting mined out. But is there, given I guess the depth from surface, is there any chance of this being a pit, or is it much more likely to be underground?
Underground, almost certainly
Okay.
underground.
Okay, some sort of ramp, I guess, access and.
The beauty of it is most of these veins, even the Bonanza and the Golden Gate, are actually above the lowest part of the valley floor. So you could go in, horizontally. You don't have to sink a shaft. You can go in and you can put an adit, and then development drives upwards. So you got gravity working with you. It's actually idyllic setting for developing a mine. You don't have to dig down. You dig sideways and then up, which is, as we know, very, very friendly.
That's great. I have one other quick thing, and I actually met Roger, who's behind Goliath a few years back, and one of the things that struck me was how he said how because of the glacial retreat, this opened up this sort of entire area, and I guess what I'm wondering is, can you just sort of speak a little bit to the impact that that's having, and I guess the discovery potential that means for this kind of project.
Well, look, if you just look at the glacial cover across the Golden Triangle area, and I picked the Golden Triangle, I say that because it is such a prolific gold district, gold camp. It's just well endowed with metal, a lot of metals, copper, gold, silver, etc. If you wind back the clock, say back to the SK Creek discovery days, which would be the late 1980s, I would say there was a significantly much more glacial cover over the critical areas, like maybe twice as much glacial cover over the more prospective parts of the areas around the red line, we'll call it. So as time has gone on and we've seen that glacial retreat, snow melt, we're seeing a lot more ground. Probably like I said, nearly half of it has gone away at this point, the glaciation. That's opening up areas for lots more discovery. So look, it will mean that there's going to be a lot more discoveries to be made over the next few decades as this area kind of melts away and opens up.
Okay, thank you.
Okay, thank you for participating in the Q&A. It's almost about time when Quentin going to switch to a warm area in Fiji. They're building up a high-grade gold mine. It reminds me of K92, which I was an early investor. So game on, Quentin.
All right, thanks. Look, Line 1 Metals is one of my favorite gold stories on Earth. It has been for many, many years. I've been watching them drill at Tuvatu. I was watching them from, say, I think around 2009 up through 2018 or so. And, one high-grade result after another. It's an alkaline gold system, has a little bit different flavor to it, usually narrower lodes and things like this. But I know alkaline gold. I grew up in Colorado here. We have a number of alkaline gold systems. In fact, right up above my house, there's an alkaline gold camp. And I cut my teeth on these things. Okay. I know them quite well. I know some of the features about these deposits that make them so special and prolific. And I'm going to talk about some of those today. Okay. I joined Lion One as an advisor 2019. It was at a time when they were kind of an impasse because they had drilled a lot of holes in the shallow level. They came up with a modest resource. Can't remember exactly what it was, but call it 600,000 or 800,000 ounces, I believe. But they hadn't drilled deeper. They hadn't drilled or hadn't explored aggressively around that. And they certainly, hadn't developed a mine at that point. Okay, advanced this story, 4 years now, and guess what? We've drilled deeper. We found lots. We've got a mine in place, and they're starting to mine. I mean, this is an amazing story that has now moved forward at what I'll call light speed compared to where it was a couple of years ago. Okay, once again, disclaimer for the company. Here you see the position of Tuvatu. It's way over there on the right. It's part of the Fiji Islands, but it's also part of the Circum-Pacific Ring of Fire. And in particular, we're looking at a belt of islands that hosts a number of what I call alkaline gold deposits. They're gold deposits that are associated with magmas that have a lot of alkaline metal in them, particularly potassium. And these melts, for various reasons, tend to carry a lot of gold. And that's what makes them so special. The porphyries and the vein deposits, the lode deposits that are formed by these magmas tend to deliver lots of gold, like world-class levels, many millions of ounces. Here you can see a range of alkaline deposits. 3 of these are in the Southwest Pacific, the map I just showed you. One of them is in Colorado, which is not far from me, Cripple Creek over here on the right. In each case, the volcanic complex, the magma center, we'll call it the hot spot where the magmas came up, is about 7 kilometers across. And you can see in each and every one of these things a large endowment of gold. Porgras, 25 plus million ounces. Lahir's 40 million ounces. Even Vatukoula, which is very near to Vaatu in Fiji, 11 million ounces. And then Cripple Creek is actually about a 29 million ounce gold endowment. Huge, huge systems. They're very special. They're also very rare. Okay, this image that you see here, what makes this so absolutely impressive to me is that there was absolutely none of this here 4 years ago when I first started helping the company. Okay, this was built by their team, headed by Patrick Hickey, he's a good friend of mine, I introduced Patrick to the company a couple of years back, and in just a very short time, they've made this from a exploration project into a mine. This is their plant. It is now in operation. They poured first gold a little over a month ago. It's a 300 ton per day plant, but it can be expanded very quickly to 500 tons per day. They're using this to kind of, ground truth this deposit and the production it can make. And, will this grow? Most likely. Okay. So far, so good. The gold production, is looking like it's proving the deposit. It's proving the stats that we recognize about the deposit and its grade and so forth. And it's now likely going to end in a much, much larger scale mining operation. All right, but this is where the Vatukoula deposit, which is the one I talked about nearby in Fiji, started. Okay, way back about almost 100 years ago, not quite. A little company called Western Mining started a gold mine at Vatukoula, which was also called the Emperor Mine, and it was a very similar scale to this. In other words, they gave it a go, started mining, and here we are 89 or 90 years later. I think it's produced 7 million ounces at this point, and it has about 4 million ounces of reserves and resources left. I think this is the start of the next Vatukoula. I think this is going to have an exceptional outcome. Okay, here you can see the first gold pour. Wally is up in the upper left there. This is the opening ceremony. One thing about Fiji, they are proud people, and they're very, very well attuned to mining. Okay, these guys have a mining culture. They've been operating at Vatukoula for many years. Many of the miners that used to work at Vatukoula have come over to Vatu, now work for us. But the government also takes great pride in seeing this new mine being built, because Vatukoula has been so important for the country for many years. Now they can say Tuvatu. Tuvatu is the future, and the future looks good for Tuvatu. Okay, good friends of mine. Walter, who now I've known for many years, like 7 or 8 years, runs the company. He's chairman and CEO. Very solid guy. Has had a long track record of very successful mining stories that have sold for premiums, huge premiums. Look at this, 1.1 for Northern Orion, buying Yamana, sold to Yamana, Miramar selling to Newmont for 1.5, La Mancha's selling for 600 million. So these are success stories. I think we're going to see this one become a success story like those as well. And Patrick Hickey, who I mentioned earlier, is the chief operating officer. I worked with him at Newmont. He's had a lot of experience building mines, funny enough, in pretty, we'll call it remote locations that, require certain expertise in logistics and management that most people don't have, but he pulled it off here. And then Sergio is our senior vice president of exploration. Known Sergio for many years, very smart guy, knows these systems. He also knows how to drill things out, advanced stage projects. Okay, I won't talk about myself too much, but I do have that alkaline experience. Drilled out the Springpole deposit in Ontario for Gold Canyon. It was a 5 million ounce discovery. It's being advanced by First Mining at this point to production, and then also drilled the Rattlesnake Hills discovery in Wyoming. And I love these types of deposits. I know them inside and out, and I think this is a winner. Shares out 206 million with options and warrants, 258 million. Market capitalization is presently hovering around 175 million. Okay, you can see Wally has a very large holding, as do institutions. Yeah, Crescat is a holder, even though it's not up in the top ranks here. We do have a position in Lion One. Okay, access. It's actually very close to the city of Nandi and the international airport with Nandi. It's about 20 or 25 minutes drive to Tuvatu mine from the city. It's mining friendly jurisdiction. Fiji has that long history of mining. And you can see here a stamp that probably goes back to the 1940s when Vatukoula was in its heyday. And look at that mine. Look at that head frame. It's not all that different than what you see today. Just think of Tuvatu as a brand new Vatukoula, brand new Emperor mine. Here's the geologic setting. This is the Nabalao caldera. Tuvatu is the yellow dot there in the lower center. but there's a lot of other targets across the property. We have been exploring very diligently recently, and we've come up with some amazing discoveries, even more recently here, like at Lamuni Creek and Batiri, just to the north of Tubatu. We got high-grade samples at surface. A little bit of drilling has been done there this year, but this is exploration upside that will be explored as this project goes. Remember, Vatukoula started as a bit of a wing and a prayer. They didn't drill it out, ad nauseum. They built a mine, and then here we are, 90 years later. It's produced over 7 million ounces. Okay, this is how these things should go. We need to preserve capital, get into production, get that cash flow going, and then you explore the rest. So you don't just sit there and drill ad nauseum. Okay, Tuvatu overview. This is three-dimensional images or snapshots of where they are developing this load system. You can see it's a very complicated load system. It's a sheeted load system where there's just innumerable. Think of these as little planes that are just stacked up on top of each other. The one on the left-hand side is a plan view image of that. You're looking down on the innumerable loads. Some go north-south, some going to go northeast. And then over here on the right, you're looking at a cross-sectional view where you can see the sheeted veins in vertical profile. They tend to be steeply dipping, which makes them easier to mine. The deeper part of this was first tapped by drilling we did, or I pushed the company to do a couple of years ago. And now we're opening up these loads at depth. We're finding some of the best grades are actually in the feeder zones below them. Here's some of the high-grade gold results. Some of these are actually recent too, but you can see just phenomenal grades in this system, but a lot happening at depth too. So we got near-surface mineralization, bonanza grades. Look at some of the grades we have in the 500-meter level. These are the ones that we've started to open up, through exploration here in recent years, just in the past 2, 3, 4 years. Starting to see lots of high-grade veins open up at depth, nice fat widths. And then at depth, we are also seeing high grade pop up. Okay, we have a couple holes down deep. One thing about these alkaline systems that's true across the board is they go deep. Okay, the magma that produced the system is probably a kilometer or two below the surface. So these things tend to have a lot of runway and tend to add ounces as you drill deeper and deeper. Here's a picture underground of one of the mining phases. You can see the main vein. These are not big, fat, wide veins. These are skinny veins. But when you look at the assays around these things, they're just jaw-dropping. Okay, the little tiny veinlets, the little tiny fractures within that zone can carry phenomenal amounts of gold. Oftentimes, you see specks of visible gold in many of the stuff. You can see down the lower left-hand part of this image. There are places where visible gold is actually sticking out of the rock. So they're skinny, but they're high grade, okay? And to drill them, they're kind of a pain because they're very squirrely to drill. You can hit a skinny part. You can hit a place where they're not even present, but they're there. And boy, when you get underground and start mining them, you really find out the proof's in the pudding, okay? And they're starting to see that as they get underground and mine this. They are seeing the widths, the grades, everything's proving to be as true or better than expected. Here's another image underground. You can see right away, look at the gold in the lower left here. That's how the gold occurs. Can you imagine drilling a hole through little veinlets like that? You might hit a place right, 2 inches away and you hit nothing, and then you move over an inch and boom, you're in, super high grade visible gold along a millimeter scale veinlet. And that's where the gold is. Okay? It is the nature of these systems. Anyway, in the face of the working over here on the right, you can see the assays that have come back, phenomenal grades, 15 grams, 15 grams, 64 grams, 46 grams. This is how these systems behave. And they tend to be wider because those little veins that are on the margin are hard as heck to hit in drilling. And when you get underground, you find out, gee, we might actually push the wall out that way, or push the wall this way, or whatever. And you can find there's more and more gold as you go. Okay, additional discoveries are being made. We've talked about a few of these. As they get underground and they open up some of the areas, they can actually see loads in between the loads in often cases, okay, like, loads that were never modeled. And in the drilling that they've done historically from surface, maybe there was one occasional little pop in a, in an area, and everybody is like, I don't know what that is. Well, they're turning out to be loads, additional loads that are likely going to be exploited as part of this mining. So lots of upside. Regional exploration, I talked about this. The team at site does do routine work, but it's at a modest level because they've kept their powder dry for spending money on building the mine. They wanted to get that first and foremost. But now, as they get this thing going, and then as future cash flow starts coming in, they should be able to aggressively explore this very, very prime country where there's extremely high grades. And like I said, Vaticola went from being a dream. When Western Mining showed up there, did they have, 10 million ounces drilled out? No, they started with a few drill holes that told them, hey, there's a deposit here. Let's have it a go or give it a go and see if we can mine it. And that's where we're at here. But the surface expression of this high grade is huge. It just goes on for miles through here, about 7 kilometers from southwest to northeast. And a lot of these are going to be future deposits or veins or lodes that will be mined. Here recently, this Lumuni discovery, a very interesting discovery because it's extremely high grade. And this is not far north of the existing mine. Okay, so the mineralized structure has a different trend to it. You can see some of the assays that have come out, 48 grams, 66 grams, 15 grams. These were unexpected results out of this area. It was at a point when the Sabeto River was low, they could actually see the outcrop. And here we are making a new discovery in an area that, quite frankly, a little drift over to this sometime in the future could open up a whole new high-grade vein system. They have a state-of-the-art lab on site. They have to. They got to do their fire assay, keep their grade control under control, as time goes on. They got to know where the grade is. So they have their own assay lab. It handles both the assays from underground sampling, as they mine that grade control work, but it also does assays of their core. So they get very good turnaround, and they are expanding. The production capacity is 10,000 samples per month. It will likely get ramped up as time goes on. They need more and more capacity, but they have a great start to begin with. Responsibility stewardship, you can see the company acts in what I consider one of the most responsible ways possible. Everybody on site is very close with one another. It is like a big family. When I see that, I can tell you things go well. The miners, I know a lot of these guys. When I would go over, we'd all hang out together. They're all very friendly people, amazing people to work with. And we just, we're all rowing in the same direction, making this mine work. And here we are in production. All right. So what's the impact? 350 direct local jobs. That's huge for a country like Fiji. It does provide tax revenues to the government. This is a big darn deal for Fiji. This is not a huge GDP, but a little bit like this helps tremendously. Near-term catalysts. The plant is under construction. The first gold pour was a few weeks ago. They're starting to look at expansion that'll be ongoing into the next year. But then the Zone 500 development, they're going to corkscrew down and get down into some of the deeper parts of the higher grade lodes that we know are below the current development area, and start exploiting some of those really nice fat high grade zones that were discovered a couple of years ago. You remember back in 2020, that drill hole, 12 meters of 56 grams. We're going to get down there. They're going to start mining it, guys. Okay, that's what this is all about. Okay, value proposition. Look, this is going to make a fantastic mine a la K92. Like Chen said earlier, it's a very similar story where they basically bootstrap a mine into production. I would expect this thing to have a very good future ahead of it. Might be a year or so when they kind of ramp up and get to that point where they're hitting things on all stride. But this thing should deliver, especially going into an increasing gold price environment. I think it should do very well. Okay, that's it, guys. If you have questions, fire away.
So, first question: the line one, any on radar screen of any other majors? I mean, I know you cannot comment on those, but what is exit strategy of course, for line one? Maybe you can tell us.
Yeah. So
insight.
Yeah, look, most of the major mining companies, they know that these alkaline gold deposits can deliver some really spectacular results. They don't tend to have huge production, maybe 100 and some odd thousand ounces a year, maybe 200,000 ounces and change. But boy, they're high margin. Okay, so from that point, there are majors that are having a look at Lion One, definitely, because they know that these guys, as they demonstrate the proof of concept that they can mine this thing and make money, they know that there's a future ahead here. It doesn't take a lot of brain cells for somebody at a major mining company, especially some in the Australian area, to know the potential of this thing. Okay, but you also have a lot of, we'll call it, newer mid-tier producers that are kind of showing up in this part of the world that are increasingly taking a view towards this, even K92. So you got situations where there's Australian producers, kind of mid-tier Australian producers with an appetite to grow, that have experience underground mining like this. Look at the deck of Australian producers. You got Northern Star and Evolution, and so like there's good interest in this.
Great, thank you. So what are the production forecasts for 2024 and 2025? I know it's pending on the upgrade of the
Yeah, it's
mill.
a bit early to say as far as forecast. I don't think they are providing forecast yet. Certainly not my department, but I think what I would take away, Chen, is that not take away, but just look for is, if this 300 ton per day operation, we'll call it a pilot scale operation, is successful. The mill, we got to see good recoveries out of the mill. Some basic things. We got to see how the mining underground delivers. Can they mine this thing at more aggressive widths? Can they deliver the tons to the mill, et cetera, et cetera? There's a lot of little things that have to be watched very closely. But as we see those things, hit expectations, hit the metrics that are needed to make a larger commercial mine, I think once all of those come together, then they can provide forecasts and stuff. But my view is this should be successful, everything I've seen so far.
Yeah, great. Well, next one is my favorite. I mean, I'm a shareholder too, so there is some kind of expectation. I'm not sure it's in the stock price or not, that when you mine it, the grade actually better than expected. You have so many spectacular grade, and then you assume a very big dilution, but it may not material. I mean, you make a mine better and have a better margin.
Yeah, some mines do this. Alkaline gold systems often do this. They over deliver, they overcall. They provide more gold than was predicted, and that's a function of drilling oftentimes, because a drill hole, is 2 or 3 inches around, and those little veins, you saw them. There's blobs of gold along those little tiny veinlets, and more often than not, you're going to hit an area that doesn't have so much gold. But boy, when you get underground and you start mining it in bulk, you're going to get all of the gold. Okay, and that's what matters here. Like, these things can deliver much higher grades. They've seen it in recent news releases. They've talked about the very high grades they've encountered, and they see it also as they do more intense infill drilling, like very close space infill drilling. So we're seeing that kind of effect. Now, that said, Chen, there's another part to the story, is that those veinlets around the lodes, those appear to extend out further than we thought too. Okay, so they might try to reach out and grab some of those too. Now, that might have a little bit of a dilutionary effect, but it would result in a higher tonnage as well. So it's a bit of a balance there. Okay, I hope I'm making sense, but it's not just about the grade of the loads being better than they think. It's that there's a lot more width in some areas to mine, and it will deliver gold. It's like, you're not going to leave 5 or 6 gram rock in the ground if it's right next to you. Okay, so you want to grab that.
Yeah, absolutely. So what do you think line one right now in terms of the sun curve? I got a question.
It's a right hand story, Chen. We know it is. I mean, look at what it did a couple of years ago on exploration back in 2020. Huge run up, went up to 260 or so. And then it pulled back, as the exploration story kind of unfolded. The speculative stage ended as they started to make moves to go into production. Of course, it comes off, very tough market too. They had to finance it, get a lot of work done in terms of permitting stuff, but they pulled it off. So now where are we? We're in that low point, heading up from here.
Great. Do you have any number how much capital has been invested in this project so far, Tobacco?
I don't know all of the numbers. I guess what I would say is since I started joining, I don't know what was spent, say 2009 through 2019, so that 10-year period. I'm going to guess it was a few $1,000,000 a year. So, maybe 30 million in aggregate over that 10-year period. Just a guess, I don't know. But since I've been with them, we spent probably the better part of 30 million in exploration over the past 3 years, 4 years now, I guess. But they've spent upwards of I think around 80 million or maybe a bit more on the development side too.
Okay.
Yeah.
Okay, great. So we hopefully will see the fruit of the development and exploration. So what's like the biggest challenge? I mean, for line one right now, you know anything you're aware of?
It's really just about delivering on these metrics that I talked about. The key is going to be the guys have to get their legs under them in terms of mining. Okay, they got to get comfortable with how wide they're going to mine this, and not incurring too much dilution, making sure they're delivering good grade to the mill, and making money. Really, I mean, that's the key. I think it'll take 2 or 3 or 4 months, for them to grow more and more confident. But I think once they get past that, I actually expect this to have a pretty good outcome, because there's other things that they've already demonstrated, as far as I've heard, that they were very curious, like, is this really going to work? Like the mill, for example. Oh, the mill's getting very good recovery. Okay, I've heard that it's getting over 90% recovery. If so, then that concern is diminished greatly. Okay, so it's all about the mining right now. It's about delivering the tons and keeping that grade high. That's what it's about.
Great, thank you. My good friend Peter may have a couple of questions if you want to.
Sure. I was looking through the corporate presentation a few days ago, and I was what I was able to see in terms of, I was curious about the resource, and what I was able to see was that it goes back a few years. I think it was 2018. We're looking at about a little over 500,000 ounces of gold. First, can you tell me, is that accurate? And if it is, would you? I know this is very much forward looking.
Yep.
Any guesses as to what may lie down there?
So the reason I brought up Vatukoula early in the talk is that this is a very similar story to Vatukoula. At Vatukoula, which was developed by Western Mining, they did not drill this thing ad nauseum, and nobody sat around and wondered what their 43-101 resource was over and over again. Okay, if people are obsessed with that here, you're probably not investing in the right story. Okay, this is a story where yes, they had 600, 700, or whatever thousand ounces in resource, I believe, right before they started. They committed to going on this mining pilot scale mining exercise. Is it more worth their time to sit there and drill holes ad nauseum, or does it make more sense to go ahead and put in the decline, open up the veins, and start mining them? In this case, mine it. Okay, stop worrying about the resource right now. Worry about the mine, because that's what's going to matter. And I think how much gold is there. Look at Vatukoula. They've produced 7 million ounces of gold. Okay, at any given time, they usually had reserves of a few 100,000 ounces of gold, and I think that's the way this is going to unfold. You're going to see as they prove this mine can work. You're going to see a mine that has a few 100,000 ounces of reserve at any given time, and it will for the next few decades. Like 50, 60, 70 years.
Okay.
Make sense?
Yeah, absolutely. I did want to ask one other question. That is, you touched on that about the lab on site, and obviously that's not typical, but I can imagine, given their location and so on. Can you give us some idea or maybe elaborate a little bit on the advantages that means for someone like Lion One?
Yeah, they got to get assays quickly when they're mining. They have to have that data on a daily basis. Okay, so that's very handy. You know, first and foremost, they need that kind of information, but it also helps with their exploration too, infill drilling and exploration work. They're getting analyses way quicker than anybody else in the mining world because they have their own lab. You know, if they ship this stuff out, like if they were drilling holes and then they shipped it over to Australia for assay, they might get numbers in 3 months. Now they're getting them in, you know, a week, 2 weeks, something like that.
Makes sense.
Okay.
Thank you.
Thank you, Peter. Well, for the interest of time, maybe we'll finish here, but feel free to reach out to Quentin, to the company, if you have any further questions. Now we have our finale, have Peter to present his case of silver.
As you can see, I'm going to talk about silver and the outlook and the potential. So obviously, silver on many metrics is very undervalued and yet is becoming more and more of a critical metal when you look at its applications. And there are patents that are filed and applications that are discovered on I'm going to say almost like a weekly or monthly basis for this wonder metal. And I'm going to talk a little bit about the macro view in terms of the economics, short and medium term outlooks. I'm going to look at understanding the silver market, the drivers, and then finally the opportunity. So if we look at macro and inflation in particular through the U.S. Consumer Price Index, it's interesting that headline inflation actually has been falling pretty steadily since the middle of last year or so. And normally when you include food and energy, which are not typically included in the headline number, you get a higher number. That's actually not the case right now. And that's because both food and energy have been falling faster than the rest of the items in a consumer price basket. So the fact that inflation is falling and you've got rates relatively high, that has the market looking at their options, and stocks have become more attractive. And that's been obviously a bit of a headwind for the mining space because that becomes an opportunity cost. But, and this is an interesting chart, one of my favorites from Crescat, where Quentin is a big contributor. And so this chart looks at the 70s, and it's two data points overlapping. The white line is inflation through the 70s. The red line is the unemployment rate. So two takeaways here. One is you can see that there were three successive inflation waves from the late 60s into the late 70s, start of the 1980s. And so a couple of things about that is that these waves came, they came, they ebbed, and then flowed again. Each successive wave was actually higher and considerably higher than the prior wave. If we are in a similar environment, and I think that we are, one of the concerns is going to be that while inflation may be paring back right now, it's very likely to come back and come back even stronger. So the second point that I want to make is about the unemployment rate. So that's the red line here. And as you can see, unemployment tends to lag the inflation rate. So unemployment tends to bottom a bit, anywhere from about a year to about 2.5 years after inflation bottoms. And so what's interesting is if you look at where we are right now, unemployment has been very low, and that is what has the Fed, I'm going to say, kind of nervous about the risks in terms of an overheating economy. And so that's why they've been so aggressive in terms of raising rates. And yet this rate hiking cycle that they've gone on, which is very aggressive, as I say, really does seem to start to be taking hold in terms of when you look at unemployment. Unemployment rates kind of bottomed in the spring, late spring, rose, dropped again, and then it looks like we may have seen the final bottom this year in July at 3.5. It's only been higher since then. We're currently at about 3.9%. And that leads to my next chart, which goes back to the 1950s. And so unemployment is a great predictor of recessions. All of these gray bars are recessions. And what stands out, what the takeaway is here, is that unemployment bottoms often just shortly before recessions start. And that makes sense because you have the Fed becoming more aggressive in hiking rates because they feel employment is too high or unemployment is too low, and they're afraid of the economy overheating. So they step in, they start hiking rates, and that, of course, tends to lead to ultimately recession. So I think that we're getting a lot closer to one. I think odds are, by many indicators, including this in particular, that recession is really not very far off. Perhaps many people will tell you we're there already, but I guess on an official basis, perhaps within a quarter, maximum 2, I think is likely. And one more that suggests a recession is likely sometime soon is the Purchasing Managers Index, which tends to also precede slightly drops in GDP. We've seen a big drop off, if you can see right here, in the Purchasing Managers Index over the last maybe 6 to 9 months or so. This green line has dropped off dramatically. We've seen GDP drop off, but chances are the GDP has considerably lower to go, and that will, again, kind of reinforce the recession expectations. So I talked about the rates. We are at the highest Fed funds rate going back to 2001. That's very aggressive. We've seen some of the effects. It seems like employment has sort of resisted that, but it's starting to cave to the effects of that. And the Purchasing Managers Index certainly alludes to that as well, that the economy is slowing. Businesses are having a much harder time with higher rates. It certainly ups their cost of business, and it certainly makes things more challenging for consumers as well. So high rates has another consequence, and that is return on treasuries, which until recently, almost the entire treasury yield curve was above 5%. That's pared back a little bit. I can't help but think that right around the time that the Fed had to make its decision, early November, to stay where they were or potentially hike rates one more time, that this rise in bond yields basically caused the Fed to blink and kept them from hiking rates this last time in early November. And so what this does too is it makes stocks and other sectors like precious metals and mining, for example, relatively less attractive, because when you can get 5% on a money market or in treasury bills or bonds, why wouldn't you go the so-called risk-free route? And what it's also doing is it's making life difficult for the federal government, because in the US now, its interest payments are nearing $1 trillion a year because of rates having risen so much. And there is this projection from the Congressional Budget Office that we're currently at about 33 trillion in debt. They think that within the next 10 years, we're going to be at $53 trillion. And that's on a $5.2 billion increase in US public debt every single day for the next 10 years. And I actually think that where they are wrong here is that the angle of this line is probably going to be steeper, and we're going to get to that 53 trillion probably sometime before 2033, perhaps a few years earlier. And so things are getting very, very challenging for public debt. Another great Crescat chart here from Tabby Costa. He shows how just in the next 12 months, the US federal debt maturing will be $8.2 trillion. And so all of this is about a third of all of the outstanding treasuries. And all of this is going to have to be rolled over at much higher rates. So the interest expense is just going to become more and more challenging for Treasury. Now, this is one of my favorite charts because it shows what I believe is a huge shift in sectors in terms of where we could see things heading, and I believe for probably at least the rest of this decade. So this shows you, you see the bottom here, this inflection point. That's right around the time of the pandemic panic when COVID hit. And so this is a commodities versus S&P. So it's a commodities to S&P ratio chart. And so when this line is rising on balance, which it is, it tells you that commodities are outperforming broader stocks. And so you had a steady rise for about 2 years after COVID hit. And then this green line is interestingly enough, when the Fed started to dramatically increase rates. So early last year in 2022, and commodities dramatically started to outperform the S&P. So what does that tell us? Well, the stock market certainly didn't like really aggressive rate hikes, and yet commodities relative to stocks actually performed quite well. Now, since then, we have an interesting dynamic where what we have is versus the S&P, commodities have pared back some, but they have still stayed above this rising trend line. And for me, that suggests that commodities are very likely to stay strong through, as I say, the rest of this decade. This is probably going to be the trade of the decade, to be somehow invested in commodities. And this yellow shaded area shows you how despite that aggressive rate hiking cycle, commodities have stayed strong versus the S&P and managed to move in at least a consolidating trend sideways for the last about a year and a half or so. Again, here's another of my favorite charts that I put together. This shows the gray line is the silver price and the orange line is the Fed funds rate. So again, this marker here, the green dotted line, is the point at which the Fed started to aggressively hike rates early of 2022. So the orange line is the Fed funds rate, which rose very dramatically as of that point. If we look at the gray line, silver, as we know, in spring to summer of 2020, went from about $12 to $30, and then since then has been trading in a sideways range. And so for me, what is impressive here is that if you look again at this timeline, this marker, this green dotted line, when the Fed started to hike rates dramatically, silver did pare back, but did not crash, and has, in fact, ever since that point in time, managed to trade in around the, I'm going to say $18 to $26, $28 range, remaining very steady, and in the last several months has remained actually on the higher side within that range. So silver very steady despite strong headwinds from higher rates from the Fed's rate hikes. So now let's look at some of the drivers. Impressively, the International Energy Agency believes that this year we're going to see investment in solar, which, as Chen explained, and I've touched on multiple times in the last couple of years and in recent presentations, is a huge consumer of silver. And so about 10 years ago, investment in oil was obviously a multiple of what it was in solar. Oil has pared back, solar has climbed, and so they're essentially neck and neck this year in terms of the amount spent in these two industries. That really is an impressive feat for the solar sector. And because the cost of solar panels has come down so dramatically, that has made them that much more attractive, and they are catching up very quickly. Now, the other point is how, again, according to the International Energy Agency, they forecast that by 2027, just 4 years from now, solar is going to have surpassed both natural gas and coal as the world's top source of power. That too is really dramatic and a testament to two things. One, the push, needless to say, the mandates by governments around the world to reduce carbon emissions, which solar does, and the drop in cost from solar energy. So manufacturing solar panels, they've come down dramatically in cost, and they're being adopted really very quite widely. Now, just quickly, we're looking at here the growth in solar manufacturing capacity. That's been really breathtaking. In 2021, we saw a 55% growth rate. Last year, a 55% growth rate. Again, the forecast for this year, according to Rystad, is 28%, and yet by mid-year 2023, we were already at 18.5%. So I think this number for 2023 is likely to end up being closer to 33 or 36% growth. Really impressive growth in the ability to manufacture solar panels globally. Now, this chart is a little bit dated, but it shows us the amount of silver that goes into solar panels. And the growth just in the last couple of years, 2021, it was 110 million ounces. Last year, that was already 140 million ounces. And I'm going to refer back to what Chen was saying earlier in his presentation, based on some numbers that he saw just yesterday. This year, we could be somewhere close to about 200 million ounces of silver. Again, dramatic growth. If that's the case, I think we're going to see some really, really impressive deficits in the silver space in terms of supply. Now, he also spoke about this in terms of silver loadings. That's the amount of silver that goes into each solar panel. His chart was slightly more up to date. What was interesting is that the amount of silver really is flatlining, in fact. So the amount of silver that is going to a single solar panel, really they've managed to squeeze out the most that they can. That's actually going to, in my opinion, we're at an inflection point that's going to start to rise now, because the more or less dominating technology in solar panels is PERC. Yet the next two quickly adopted technologies are TOPCon and HJT. These take anywhere from 50 to 150% more silver per panel. Now, you may be wondering, why would a manufacturer make panels that take more silver? But it's all a question of economics. And so the reason they do that is because despite the higher cost per panel, it's the output, the energy output grows enough over the prior technologies to justify putting more silver into that panel and getting more electricity or power out of the panel. So here we have a chart from Rystad. It shows us that these two are more advanced technologies that take a lot more silver, 50 to 150%. Just 3 years ago represented 10% or so of the total manufacturing capacity. This year, they're already expected to combined reach 35% of worldwide manufacturing capacity. And so they are really taking over very quickly. And I expect that because of that, the demand for silver for solar is going to continue climbing very, very aggressively. Energy transition as a whole. This chart is a meta-analysis by the IEF. They've looked at, I believe it's 11 other studies. And for the entire energy transition as a whole, so this includes all sorts of things like wind power, EVs, EV stations, things like solar, of course. So currently we're at about 5 kilotons of consumption of silver per year. They forecast that as a whole, for the energy transition by 2030, that's going to double to 10 kilotons, and that by 2040, it's going to triple to 15 kilotons. So the silver demand is really continuing very, very aggressively. Demand from solar has been up. So see, this forecast here was 161. I believe, as Chen said earlier, we're going to be probably somewhere around 200 million ounces for this year. So that's going to be well beyond 300, probably 350% growth over the last 10 years. Investment demand, that's expected to fall off a bit somewhat this year from last year, but that was really aggressive, basically doubling in the last just 5 years or so. And now mine supply is actually down by about 2% this year, and that is in facing this huge growth in demand for silver industrially, from investment and so on. So really dramatic growth in demand, flat line in supply, and leading to what are likely to be ongoing deficits. So let's look a little bit at what the drivers are. There was a recent report by Oxford Economics that said that looked at fabrication demand forecast for the next 10 years, and they see industrial silver demand users overall as a group will see their output grow 46%. Electrical and electronics particular will grow 55%. Jewelry output is going to increase 34%, and silverware output is going to increase 30%. And these are the numbers that were just released yesterday. So just quickly, industrial demand, as I say, up 8% from last year, from 584 million ounces to 632 million ounces. Solar is within that. And so if you look down here, the market balance, they believe the annual deficit for this year is going to be somewhere around 140 million ounces. And they expect the deficits to continue. In their update, as I say, industrial demand up 8% to a record high. I think jewelry and silverware are going to ease after a record year last year. Investment demand also to ease to just below the 2021 level. And that, as I say, that supply deficit will be the third year running. And this with a 140 million ounce deficit this year, and that for that to persist for years to come. So just to recap, 2020 was the last year we saw a surplus in the silver industry. 2022 saw a big swing from 56 million ounce surplus to 237 million ounce deficit. That was an over 300 million ounce swing in the matter of just 2 years. Very, very impressive developments. Silver is a tiny market, and if you compare that to gold or the S&P energy sector, much less Apple, silver barely shows up on this chart. And so it takes a lot less buying and money from retail or institutional investors to really get things going in this market. In the 70s, silver saw a tremendous bull. I think that we are in the second leg of a secular bull market, which started back in 2001, which saw 1,100% returns in the silver price. I think that we are gearing up for the second half of this secular bull market, and we could see some dramatic returns over the rest of this decade. To give you some idea on where the opportunity lies, junior silver stocks can offer some incredible leverage. This looks at the period in the early part of 2016, between January and August. Silver itself was up pretty dramatically, about 40%, and yet during that same time period, junior silver stocks were up 320%. That was an 8 times leverage over the silver price. So if you're going to look at, and I believe you should, because the returns are just so potentially strong in this sector, to have a game plan. So silver and silver equities, they really are massively oversold. Really, this is a great opportunity for you to do your research. You can scale into new positions and look for things like top tier management, look for projects that have scale and have great companies that are well cashed up. You want great jurisdictions. That always makes a big difference. And you want some attractive infrastructure. Not needless to say, patience. Silver requires that, but boy, it can be rewarding. So to recap what I do, I write the Silver Stock Investor newsletter. It's the only investment newsletter focused exclusively on silver, and I cover the entire gamut, everything from physical silver and ETFs to mining ETFs, royalty and streaming companies, large producers, mid-tiers, developers, and juniors. And every twice a month, I give you my thoughts on the macroeconomic landscape. I give you some exclusive research on silver market drivers. I provide a technical chart review of silver, the dollar, silver stocks, and anything relating, and an analysis of new recommendations, a full analysis of a new company, and as I say, bi-monthly updates on the portfolio and its holdings. So if you want to follow my work, you can go to Silver Stock Investor. I'm also on X, previously Twitter, at Peter_Krauth. I'm also on LinkedIn at Peter Krauth. And last year published a book called The Great Silver Bull, which is a great intro to this entire sector and helps you understand all the drivers and how you can position and take advantage of this generational bull market. You can get it in paperback, audiobook, or in Kindle. And one last item to mention, I'd like to invite you to join us, ideally in person, but if not, virtually, certainly, to the next Metals Investor Forum, a live in-person event, which will be January 19th and 20th next year, being held at the Fairmont Pacific Rim in Vancouver. So we certainly look forward to seeing you come out and join us there. And with that, I am going to wrap up my presentation, and was glad to have everyone here, and happy to, I'm glad everyone was able to get some questions in and enjoy some fantastic presentations by Chen and by Quentin. And we certainly, again, look forward to seeing you again soon.